Yo, yo, yo. This is Trading Trenches, your number one podcast for trading news and views, helping you navigate the financial markets. It's your boy Nathan,
It's your boy Warren.
and we are here to discuss the biggest winners and losers of 2020.
Yep, 2020 has been an absolute mad year for
Madness.
everybody.
Madness.
Everyone has got their own individual stories, but there was some definite losers of 2020, but then there was some pandemic successes. And we're just basically trying to evaluate who won and who lost, who had the biggest gains and who had the biggest losses. So we're just going to really just talk our personal views on who came out the best and who came out the worst. And I think most of the people that are listening here can really identify and this with the stocks and the companies that we've set and sectors that we've picked. And it's quite obvious really, but we just wanted to highlight these and just go for it.
And really what we're looking at is, let's say you had £1,000, £2,000, maybe even 10,000 at the start of the year. If you'd allocated that money in each of these sectors or each of these assets or stocks, how would you have come out at the end of 2020, and how would you be sitting now after that year of COVID? Some of you have been in lockdown, some of you have maybe lost your jobs, some of you might be furloughed or not working, some of you might have got some stimulus checks for our viewers in the US, but how would you be ending the year if you'd put your money in some of these biggest winners, or if you'd put your money in some of these biggest losers? So we've got three biggest winners and three biggest losers. I think we're going to kick off with the biggest losers to start with. Am I right?
Yeah. Let's go.
So in terms of losers, I'm going to kick off with Hertz. For those of you that don't know, Hertz is a multinational car rental company, and they mainly focus on airline rentals. So let's say you fly from the UK to Germany, you land in Germany, you want to drive around, you're probably going to be able to get a car directly from the airport. And of course, given that no one was flying, no one was traveling, Hertz got absolutely destroyed. And so just looking at the share price, I mean, at the beginning of the year, the shares were trading around about $20 a share. And as COVID kind of peaked and people kind of realized how bad things were going to be, the shares got as low as 40 cents per share. So, I mean, if you had, let's say, £2,000, that £2,000 would have gone all the way down to what, 22, was that £40?
Yeah, that's ridiculous.
All the way down to £40. So crazy stuff. And I think it was really one of the biggest names and one of the first names to actually declare bankruptcy proceedings and say, yeah, look, we need help. One of the craziest things that I thought about Hertz when I looked into this was that people were actually buying the dip. So you got to imagine, like, Hertz, $20 went all the way down to 40 cents. And people were like buying that dip at 40 cents. And they were kind of speculating that shares would go up. And they actually did drive shares back up to $4, despite Hertz themselves saying that these stocks could be worthless. But, nevertheless, Hertz for me, is one of the biggest losers in terms of like a household name for 2020.
And I think that the reason why people were buying the dip is because they really did underestimate this global pandemic and how long it would be. I don't believe anyone would think that in the UK now we're in our second lockdown, and it's coming up to second national lockdown from March. So we're going into or reaching nearly a year, and no one could have predicted that travel and tourism
Yeah.
would be absolutely locked down,
Yeah.
almost essentially, barring work and stuff like that. So I think that's probably the reason why people were buying in the dip,
Yeah.
because they didn't believe it would last this long.
Yeah. Yeah. And do you know what? I think some people were just trading. Some people, I think, were just sitting at home. They might not have been working. I think there was a lot of like retail, so not institutions. I think it was just normal people that were saying, this looks cheap, it could go up. And in the end, you can't even fault them because they were right. Because if you think about it, if they dipped all the way to 40 cents, I mean, I doubt there was many people that caught the, the absolute bottom. But let's say you
Mm.
caught it around about 40 cents and it went up to $5. I mean, you would have got 10x on your money from that bottom. So I think
Yeah,
that's
yeah,
a crazy story, but still a massive loser. And people that were holding Hertz, they took a big L this year. That's for sure.
definitely. All right, next up, second, as one of the biggest losers of 2020, is the UK retailer Debenhams.
Yep.
For those that don't know, Debenhams was once one of the biggest retailers in the UK in the 90s. And on 2019, the share price was 183. However, in 2019, they did record a 500 million pre-tax loss. So really, before the pandemic, they were in trouble anyway.
Yeah.
And then after, obviously during the pandemic, with stores closing across the UK, it really did affect them. The reason being they still had to pay rent. They still had to pay their employees through furlough or other stimuluses given out by the government at the time. And really, it just didn't add up. The sales did not add up. Um, every year from 2017, they were going down in credit rating. So their refinancing structures was costing them more and more and more. And yeah, it was just a catastrophe, really. I believe Mike Ashley, I don't know if you know, he's a notorious retail super house. He's acquired Sports Direct. He owned 30% of Debenhams, and he tried to buy the majority of 70% for, I think it was like 160 million. That got rejected. And on the last day of when it was going into administration, JD Sports actually put in a bid, a sports retail, and that fell through in the end. So really, at 183, £1.83 a share from 2019, if you was to put if you held £1,000 in, you would have lost all your money. So, so really, we have to put that in, and I think the reason for that is simple. Really, we was on a national lockdown. All essential, non-essential shops were closed. So, imagine how much revenue they would have lost on sales alone. And then conversely, you're still paying rent at an astronomical rate.
Yeah.
They've got 165 stores across the UK.
Yeah.
And their rent bill alone was 300 million. Now, that was 13% of their turnover. So we're not taking into account wages. We're not taking into account pension schemes. We're not taking into account a lot of other tangibles that they've had to account for. And it really just knocked them over their head.
Yeah.
And
what? No, sorry, go on.
Go on. Yeah, so really, and another reason for it is that I believe that Debenhams, why they failed massively during the turn of 2000, and I'll say 2013,
Yeah.
2012, is that they didn't renovate their structure, their structure online. It took them a very long time. I could say this personally because that was my first graduate job after
Jeez.
after graduating. That was my first graduation post graduation job,
Yeah.
and it's really an old school mentality where it's stores, it's product, sell this and that. Whereas now it's just not like the same. Retail is not the same as what it was back in when we were in school, Nathan. Like when we
Yeah.
were in college, it's just not the same. You've got companies like Boohoo, got companies like ASOS, that their whole business structure
Yeah. They're killing
eradicates
it.
the rent.
Mm.
They're killing it.
Yeah.
They're not paying. They don't have to pay these 300 million in rent alone.
Yeah.
They're
Yeah.
they're just killing it. They're buying warehouses. They're they're using their money to invest in their marketing, their branding, and they're keeping their expense low
Mm.
whilst generating sales and also connecting with a younger audience that have
Yeah.
now grown, that have now
Yeah.
got jobs, that have
Yeah.
now got families,
Mm.
and they've really just taken that market share from
Yeah.
Debenhams
Yeah.
and big flagship stores out. And I believe that was a major reason why they couldn't really survive during
Yeah.
2020.
Yeah. Yeah. No, and it's interesting, really, because like when you think about it, you know, Debenhams, massive brand, people, you know, up and down the country and here in the UK, you know, will be familiar with Debenhams. But as you said, they just didn't keep up with, you know, the innovation and using website technology and, you know, companies like ASOS and all these online retailers that can, as you say, lower their costs. All they've got is a warehouse somewhere. They ship to you next day delivery. I remember just over the Christmas, I'm buying a few just like Christmas clothes and things. Next day
Mm,
delivery, it's there in less than 24 hours. And,
it's a
you know,
madness.
Debenhams just can't compete. Um,
Yeah.
and I think even when you look back at Hertz just quickly, they were kind of struggling before. And this COVID-19 crisis is kind of like, now that I guess the tide has kind of come out, you kind of see, oh wait, this business isn't actually fit for, you know, 2020 or even, you know, the 2020s in general for the future. So yeah, massive loser, Debenhams.
Yeah,
And I
definitely.
suspect any company now that hasn't got, you know, a decent online presence, they're going to struggle.
Hmm. They have to. I mean, especially now we're still in a pandemic, so
Yeah,
companies like Amazon, companies like Uber Eats, these sort of companies are going to thrive under these conditions naturally.
mm,
Now Amazon are doing same day delivery now.
yeah,
It's getting really online. Online it has to be a must.
yeah,
Not just for big corporations like this. It's for your everyday tradesman. You have
yeah,
to, or everyday shop. You have to have now an online presence in 2020. I think you really will be struggling,
yeah,
um, just based on the footfall. If you're just primarily base your sales on the footfall
yeah,
someone coming into your store.
yeah.
So yeah, definitely.
Okay, cool. Um, so far, Hertz, Debenhams, and then I guess the next one for me, um, and I guess this isn't a specific company, although I guess there are a few companies in this sector that I guess we can look into a little bit. But for me, it's the cruise ships. And I know the whole travel and hospitality industry was completely, you know, battered
Mm,
due to COVID-19. But for me specifically, the cruise industry, you know, when you look at companies like Carnival, Royal Caribbean, and Norwegian, that were pretty much forced to stop you know, their voyages for pretty much all of 2020. And I think even now we're you know, what, 7, 8 months, 9 months in, or 11 months, I don't even know how long it's been, but they're still not doing any of their cruises, and their stocks, pretty much all three of those stocks that I mentioned, have, you know, pretty much crashed 50 to 60% just this year. And then you're kind of looking forward and you're thinking, well, is there any end in sight for these, I guess, the cruise industry? And it's difficult because I've never been on a cruise and probably won't, you know, I can't at this moment, you know, I can't see myself going on a cruise, but it's more, I guess, the demographic is people, you know, 50 plus, people in their 60s. They want a slower pace. They don't really want to, you know, run around. They want, you know, premium luxury. They just want to be kind of pampered and catered to. And the idea that they're going to return to those cruise anytime soon, I think is unlikely, given, you know, that, you know, the cruise lines were kind of like the first place to kind of have problems. You know, when COVID, you know, first kind of came out, we were hearing of whole cruises kind of being stranded at sea because there was 5 people with COVID, and 5 people with COVID on the ship, and they weren't sure. You know, let's say there's a couple hundred people on the cruise line. They're not sure, you know, how many people now have COVID, and, you know, they're docking somewhere, let's say even in the Caribbean's thinking, well, we don't want you to, you know, come to our harbour. And so I think that was kind of the real start of the scare, where people were like, oh, you know, damn, people have got COVID on the cruise and they didn't know what to do. And I think even looking forward, it's difficult to see where it's going to end for them, specifically considering that the demographic for cruise liners, you know, it's the over 50s, over 60s, and I think they're going to be cautious about returning to cruises anytime soon.
Yeah, I would agree, because purely on a demographic, like me personally, I'm not looking to go on no cruise ship, but my mum has. From she's gone on a cruise ship and she's thoroughly enjoyed herself. So yeah, the demographic, I would agree on that. It's going to take a while for it to really return to normal. So yeah,
and it's not just the cruise ships. I mean, you know, that whole industry, as I said, the travel, travel and I guess hospitality. You know, the hotels, the airlines, and so many, you know, smaller industries within that, you know, entertainment, festival. There's so much within that sector that's been destroyed. But for me, I just think that whole cruise line industry, I don't see where it's going to go in the coming years. So that's one of the biggest. They took the biggest L's for me in 2020.
Yeah. All right then. So we've done the 3 biggest losers in our view of 2020. However, there are some pandemic successes.
Yep.
And some companies have really capitalized and soared this year.
Yep.
For various reasons, and we're going to go into that. So I'm going to kick off with number 3, in my opinion, is Zoom. So that's a video chat online service that provides web rooms for daily meetings, for conferences and so forth. And really, it doesn't take a genius to really work this out, why this thrived, because of the conditions that we were in. In the UK, all offices were closed within the city, London, Birmingham, all major cities, all offices were closed, schools were closed, and really people had to interact and had to work. So Zoom went up 429% from the start of 2020 to the end.
Big dinners. So that means if you put £1,000 in, you would have got 4.5K back. Mm.
Now, that's a 4x move, really. Um, and yeah, it 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 really was impressive. And it, like I said, it really just followed the line of this pandemic. So in April 2020, it peaked to 300 million daily meetings
Mm.
in one day. Now that is unbelievable, really.
Yeah.
And like I said, now it's integrated into our culture. Now offices, so much so that certain companies are thinking, well, we can conduct a lot of our meetings over Zoom because this
Yeah.
works. We don't have to pay maybe rates for rent, or they're restructuring their whole way of thinking of the generic 9 to 5 model.
Yeah.
Um, Schools as well, kids are able to learn online through looking at their teachers in a safe environment. Um, and yeah, this is probably the reason why it's gone up 4x. And
Yeah. No.
I believe will continue to do so, because especially now, the social aspect of human beings will never change. And now you're seeing a lot of things via Zoom, like the Zoom birthday parties, pub quizzes, even Zoom weddings um, started to pop up.
Yeah.
And so
Crazy.
I believe that it's really integrated into our culture, and I can't really see it going. It might dip once things return back to normal, once schools go back and all offices are back. But then will all offices go back? That is the thing. So
Yeah.
due to this COVID, I mean, what do you think, Nathan?
Will officers go back? Yeah, it's a brilliant question. I mean, I guess you have to look at it in a couple different ways. So I guess the first thing is, until I guess there's a vaccine, and I guess specifically for the UK, until there's a vaccine, and until people or the government say it's safe, or people feel that it's safe, I doubt anyone will really be returning to offices anyway. But let's even skip forward. I don't know if it's 3 months or 6 months or how many months it could be, but will individuals, once it is safe, want to even return to offices? And
Mhm.
what you're seeing, I think, is that, let's say it takes you an hour to commute, or even an hour and a couple minutes to commute. You've got two
Okay.
hours back in the day now.
Hmm.
And I think a lot of people, not everyone, but a lot of people will say, well, I kind of enjoy working from home. Not maybe for the social aspect, because they might miss, their colleagues and kind of interacting. But in terms
Yeah.
of getting 2 hours back in the day, they might be thinking, well, I might want to go back to the office, but it might just be one day a week. And a lot of companies, like I think Twitter and Google, the more kind of tech focused companies, have already said, yeah, like they've already said to their employees, you'll never have to come back to the office. And so I think there will be a trend where a lot of companies will kind of pivot towards having the flexibility to say you can work remotely. Um, but long term, um, that's got a lot of impacts. I mean, does that mean people no longer need to live in inner city? Like
Mm.
for us in London, rent in London's probably what rent and house prices are like so much more than living 2 or 3 hours out. So the question starts to be, well, do you still live in London? All these companies with office space, it's expensive. These
Yeah.
leases in central London,
It's not a
they can
joke.
run it. Yeah, they can run into the millions for some companies in terms of costs. So yeah, there's so many knock-on impacts, and I think this will be discussed for months to come, and we'll see. But I think there will be a shift, and it might not be everyone, but even if 50% less people work in the city, that's a massive change. Um,
Massive,
and
massive.
and that only really could have come out of COVID, really.
Yeah,
Um,
because right now
and
it's a ghost town.
it
The
goes, yeah,
city is
yeah,
a
yeah,
ghost
yeah,
town.
yeah. It's crazy. It's
It's
crazy.
depressing to see.
Yeah, yeah.
It
It's
really is.
crazy. It's crazy.
So yeah, yeah, just leaving it on that. Zoom, if you put 1,000 in, you would have 4x your money
Yeah.
this year.
And one other point on Zoom, and it's so crazy to think of, is that companies like Skype, I know Microsoft owns Skype now, but there's so many other businesses that have had video chat
Yeah.
functionality for years, maybe even decades. Um, and so it's crazy that Zoom has kind of risen when this was available. And I'm sure companies like Microsoft are kicking themselves thinking, why are they not using Skype,
Hmm.
considering it's been available for so long? But yeah.
Yeah, it's a good point. It's a good point.
Cool. Um, Next on our list here, in terms of um, big winners for me, I've got Bitcoin. I appreciate Bitcoin is not a company. Um, I guess it's more of an asset class, often described as a cryptocurrency or digital currency. Of course, it's decentralized, and you might have your opinions on. I think Bitcoin's something that is quite polar. So people either they're really very for it or very much against it.
Yeah.
Now, in terms of returns, I mean, if we break it down, just to simple returns, Bitcoin at the start of the year was around about 7, 8, 9,000. Of course, it's very volatile, so it had quite a big range at the start of the year. But let's say it was 8, 9,000, and by the end of the year, you were looking at 28,000, which is pretty much a 3x on your money. So
Hmm.
going back to that kind of, if you put 1,000 in, how you'd be looking at the end of the year, will you be about 2 grand up or around about the 3K mark?
Yeah.
Um, and I mean, there's a lot of stories around this in terms of why um, Bitcoin has done so well. What we're seeing now is like institutional investors kind of piling in. So of course there was the big um, Bitcoin kind of boom in 2017, where prices went from 1,000 all the way up to 20,000, and I think
Cheats.
yeah, yeah. So that would have been a 20x back in 2017. But this year, what we've seen is the start of a big run up that I think could continue. And you're getting companies like JP Morgan. They're saying prices could go to $150,000. Other companies have even had higher estimates for the price. But regardless of what you think the price could do, this year is pretty much booked in terms of gains. It was a 3x, and personally, I think it can only get better, and prices can only get higher for 2021. Um,
In
One other
terms of like,
thing, yeah,
go
no, so go on.
in terms of like higher, what
Mm.
do you think the potential of Bitcoin can reach? Your personal view.
Yeah, so it all depends on what you're viewing it as, right? So um, I think one of the themes of 2020 is that people are saying it's gold 2.0.
Hmm.
And I guess when they say gold 2.0, it's like you're looking at analog and digital. So
Hmm.
I guess gold is like the analog version, Bitcoin is the digital version, and gold at the moment has a total market cap of around about $10 trillion. Bitcoin at the moment has got a total market cap of around about $500 billion. And so
Yeah.
if it just matches gold, then you could, in theory, you could see a 20x from here. I don't think
Hmm.
it's going to do that this year, but that's something, or in 2021, but that's something that could probably happen over the next 4 years or so. Um,
Yeah.
so I think that's where it could go. But some people kind of even see it kind of doing more than that. They look at analog versus digital. So if you look at companies like, I don't know, Google, for an example,
Hmm.
Google have done a very good job of bringing information into one place. So you can Google, I don't know, you can Google how hot is the sun. Um, Now, when previously people would have to go to a thesaurus or, you know, some kind of almanac or whatever to work out
Yeah.
what the heat of the sun is, you can just type it in.
Yeah. Click on the
Now,
button.
yeah, it's a couple. Now the book would have cost you what, a couple pounds. Google's free, but the total valuation of Google, because they can kind of bring all the information pretty much in the world into one easy place, is way higher than any individual book or any other like library or whatever you want to kind of compare it to. And so, you know, in theory, the analog version is usually a lot lower in price when you compare it to the digital version. And I guess it's the same with like Amazon. Individual shops, the kind of price, that's kind of like the analog, like that Debenhams is kind of like the analog where you have to go in and visit the shop. ASOS and Amazon and all these online guys are the digital versions. And what we're seeing is the prices are way higher because of the efficiencies. You no longer need a store. You no longer need employees to the extent that a Debenhams or an analog version would. And so you kind of think, well, Bitcoin could go a lot higher in 10, maybe 15 years if it's still around then. But of course, it's
Yeah.
very risky, very volatile. You know, speculators beware kind of thing. It's a
Yeah.
very new market, and I describe it still as like the wild, wild west or the internet in the 90s. And so it can go up and down, and you can easily, you know, some days you see 30%, 40% drawdowns is quite normal.
I think for me, the reason for why I like Bitcoin is it just makes sense.
Mm.
The premise alone is there's a finite number of Bitcoins ever to be made. So there's 21 million Bitcoins, right?
Yeah.
Ever gonna be ever made.
Yeah.
So based on economics, demand and supply,
yeah,
it's quite, if the trust is there in the asset, and it continues to gain trust and credibility, like PayPal in October released that they're using Bitcoin now as they're trading Bitcoin on their platform.
Yeah,
they've got like 25 million users, eBay, this and that.
Yeah.
Like for me, every year it's gaining more credibility from big organizations that are recognizing it. And when you've got a finite number of 21 million, really that it just drives the price up.
Yeah.
Now, conversely, look at what we're seeing in the global economy now. They're printing money. They're printing money like it's nothing. Like it's nothing. US printed 3 trillion to stimulate this coronavirus pandemic. I think I'm not sure the exact numbers of the UK, but that was in the trillion.
Yeah. I think it was just shy of $1 trillion, but it's going up I think they just announced a new program to kind of deal with this latest lockdown. So there's a few extra billion there as well.
So then what does that mean for me, who's got £1,000 in savings in my bank now? What does that mean? What return am I getting now?
Yeah. Well, I mean, in the UK, I think the average interest rate is about 0.2%.
Right.
And inflation is, I think they're recording it at around about 2%. So at the moment, today, you're losing 1.8%, call it roughly, each year. Every pound that you hold, you're losing that. So I think the interesting thing is that Bitcoin is, what I call it, is like money go up technology. And I know that's kind of like a simple way of thinking of it, but if you've got an unlimited asset and people are making more and more of it in currency. And this is not just, the pound or the dollar, but it's the euro, it's the yen, it's every currency around the world. And the thing is, like pound, euro, dollar, these are like some of the more stable currencies. You go to some
Yeah.
places in South America or some places in Africa where, inflation's at like 10, 15, 20, 25% year on year. They have a better understanding of what it means to lose your purchasing power.
Mhm.
Whereas I think in the West, we're a bit privileged in that we only see these small 2%, 3% a year. But I think it's possible that in 2021, inflation kicks up and people see a bigger loss in purchasing power.
Yeah.
And that money go up technology, all the money from around, everyone from around the world is seeing year on year Bitcoin go up. People are only just going to buy a little bit. And I think it will start with a small amount. But because you've got that finite supply, it's almost guaranteed long term to go up. As long as you say, the trust stays there, and people still kind of believe in the coin, the Bitcoin.
Yeah. Yeah, definitely. That is definitely a winner of 2020. 100%. All right. So moving on to what we believe was the biggest winner of 2020. And that goes to my friend Elon Musk, Tesla. Tesla. Um, it's gone up 733% from last year. So
We need
that
to give
means,
Tesla a round of big dinners there.
yes,
Big dinners.
yes, yes. Maybe some profit as well. Yes, yes. So that means if you put £1,000, $1,000 into Tesla, you would have got 7,300 back, and so forth. Now, I'm still on the fence with Tesla, but I'm impressed by it. But for those who don't know, Tesla's a automotive company that sells electric cars, as well as an energy generation company that provides solar energies, and so forth.
Yeah, and
And
don't forget they own 20% of SpaceX as well, which could be a massive upside potential.
yeah, exactly. But I think the reason for their success is they've really heavily invested into their brand, and it's really got like a cult following. So similar to Bitcoin,
Yeah,
where they've got die-hard fans for Tesla.
yeah,
Like people will go talk about hours for Tesla, hours, hours, hours. Similar
yeah,
to like Porsches when they first came out.
yeah,
Um, and yeah, they've really just honed in on their brand image. Really, and the things they're doing is it's so impressive. Like
yeah,
they're now releasing their Cyber trucks, so
yeah.
that will be released in the new coming years. They've automotive is taking into aspect their automotive side of the business. They've released 500,000 cars this year, and
Which was
they're
pretty
just
much bang on target. Like at the start of the year, Elon Musk came out, said we're going to sell 500,000 cars. At the end of the year, they sold, I think the official stat was 4,999,500 cars. So 500 cars short, but still, pretty much fantastic result for Tesla.
yeah,
Pretty much bang on their target, which, investors completely loved.
yeah, and it's just a forward thinking brand, really.
Yeah.
Like
Yeah.
it's going to be around for some time, I believe.
Mm.
The valuation at $738 a share.
Mm.
To me, I believe. Now, don't get me wrong, because I've bought shares in Tesla, and it's made me money, so I'm very happy with it.
Mm.
But to me, it just is screaming out that it's in a bubble right now.
Mm.
However, if it's a self profit, uh, it's in a
Self-fulfilling
bubble, right?
prophecy.
Yeah, exactly. Is it self-fulfilling prophecy? Right. Gosh.
Yeah, you got
Yeah.
your
So
words tongue tied.
I know it's morning, loudly, but yeah, I believe that it's in a bubble right now. If you look at the earnings per share, it's minus 0.9797. Return of investment is minus 3.83.
Mm.
Now, altogether, the market cap of Tesla is 696 billion.
Mm.
Now, if you look in terms of the output that they're putting out in
Mm.
cars, 500,000, it doesn't really make sense.
Yeah.
Like, that really means that altogether, this is Ford, Toyota, Volkswagen,
All combined, really.
combined,
Yeah, I think.
combined.
Yeah, yeah, yeah.
Tesla are bigger than them. Now,
Mm.
if you look at how long they've been around, how much
Mm.
product they push out on a yearly basis, um, I believe that this bubble is only going to burst once these other companies come on board and really are competing directly with Tesla in terms of electric cars.
Mm.
Now, obviously, governments are they're giving incentives to electric companies to go into this type of technology, because in 2030 you won't be able to purchase a petrol or diesel car
Mm.
because of energy commissions and so forth. So that
Mm.
makes sense. But really, this valuation, I believe, is a bubble,
Mm.
and it will only burst once their competitors are come to somewhat of that level.
Mm.
Because you have to remember, they have loyal fans too. So
Yeah, yeah,
yeah,
yeah. No, it's interesting. And is Tesla in a bubble? I don't know. I'm not sure. I think when you look at it, right, and we'll put Tesla to a side for a minute, but a lot of companies now, and specifically the tech companies, have got valuations where their price compared to their earnings is at it's the highest multiple that it's ever been. And um, I think a part of that kind of goes back to the cheap money story, or all this money that's being printed story, where people have only got like a few choices. Either you leave money in a bank account where it's gonna, accrue 0 point whatever. You buy property, or you buy shares. And I think the kind of monetary policy that a lot of the countries in UK, US, Europe, etc., is kind of forcing people into taking risks because they don't want to lose their money.
mm,
Um, I think Tesla's got some good things going for it in terms of like their batteries and the technology behind that. They're probably 3 or 4 years ahead of the competition. And like I've got an electric car myself. I know that the price difference, I can charge my car for a couple pounds and drive 200 to 300 miles. And you compare
mm.
that to petrol, it's like it's chalk and cheese. It's
Yeah, you can't
digital again.
compare.
It's the analog versus digital story that I
Hmm.
keep on going on to. Petrol's kind of this analog version. Electricity is the digital version, and you can't compare it. So they're 3 or 4 years ahead in terms of battery power. In terms of their charging network, they're maybe 5 or 6 years, because they've got the Tesla chargers kind of dotted around the US. No one else has. You look at the names that you mentioned: Toyota, VW, Ford, etc. They haven't got that network, so they're going to have to work all these things out. Um, Automated driving. I still think we're a couple years away, but Tesla are probably a lot closer to figuring it out than the competition. And you couple in, Tesla, I think they own Solar City. I'm massively bullish on Solar City. I think solar power I think this year, 2021 will be, and maybe we'll do a video on who we think the biggest winners for 2021 will be. But I think solar energy just as a whole will, it's only improving, as in the
Yeah,
price of solar panels and their efficiency is only getting better and better. And I think all of those things combined does give them an advantage. Is that advantage worth however many billions extra? I think like they're an extra 500 billion on Toyota. Is it worth that? Maybe not. But in this kind of market, everything's kind of overvalued, and people are not looking at the price now, but they're saying, where's it going to be in 10 years? And if you own 20% of SpaceX, if you're already ahead, if you've got like the kind of cult following that you mentioned and the brand loyalty already, maybe it's worth it. It's difficult to say either way, really, for me. But yeah, you can't argue with the 7x. Money is money. You return 7x, you've done well. And next year, how much can it go? Maybe not another 7x, but I think that's unlikely. But maybe it can do 20%. Who knows?
do you believe that Tesla could reach the 1 trillion
Yeah. So I think,
market cap?
I mean, if it's at 700 billion now, I think 20%, would have it at 1 trillion. I think one of the big important things as well. I mean, I've kind of gone through quite a few of the positives, but another one that people might not even be considering is the fact that Tesla is now part of the S&P 500. So that just brings even more money. So for those that don't know what the S&P 500 is, it's the top 500 companies in the US. And so if you're like a money manager or you're an investor, you would sometimes, instead of picking individual stocks, you just bet on the whole market. And so you just buy the top 500. And the fact that they're included in that top 500 bet or investment means that, only more money is going to flow their way. And so, yeah, I think 1 trillion is reasonable. How much more than that? We'll have to wait and see. But if governments keep printing money and there's a lot of cheap money and interest rates are still 0% or, maybe even negative, which some people are kind of speculating could be possible, who's to say how far it can go?
Yeah.
Yeah, and maybe a part of their valuation isn't necessarily, obviously Tesla's done well, they're going up, but a lot of the stock market appreciation could be just currency going down. If you look at it the other way, kind of thing.
Which is inflation, really, isn't it?
Which is inflation, yeah. Asset inflation, yeah, definitely.
Yeah, man, definitely. So, but I think we've covered that, the top losers, the top winners of 2020. As a whole, it's been a crazy year. I do want to mention one little U-turn company that I was really impressed with, and that's Disney. At the time, as you know, they've got Disney parks. So at the time, it probably looked really, really bad. From where they were sitting. Also, the cinemas were closed and so forth. But my personal experience is that the films that they were going to release in the cinema, they've now launched it on their personal platform. I mean, I've watched Soul the other day during Christmas, and it was brilliant. And it was just amazing. It was just amazing. Yeah. I was like, what is this? And yeah, I was just really impressed by how they've really adapted to the market so quickly, where others haven't, and have paid the price. So I just want to mention.
It's a good point. I mean, just to put some kind of numbers around that. I mean, at the start of 2020, Disney was trading at around about $140 a share. At I guess the peak of COVID-19, or at its worst, went all the way down to $79 a share, and then now we're at, you know, almost 180, call it $180 a share. So as you say, a massive turnaround from doing pretty well historically. I think that was probably like an all-time high for Disney at 140, to like losing pretty much 50% of its value to now, you know what, an extra $30 per share on its all-time highs is a great turnaround. And yeah, things like, as you say, Disney Plus, the streaming service is a major positive and a major reason why they've done so well.
Yeah, yeah, definitely. Definitely. I think that's it. Nathan.
That's it. Yeah,
Anything
no,
else
that's it.
to add?
No, that's it from me, pretty much. We will be back with shorter, more concise kind of daily pods, just talking you through the latest trading news and views, giving you, you know, a daily kind of insight on the markets, what to look out for, what to look forward to, where you might want to think about looking into allocating some capital, and how you can invest for your financial freedom and wealth.
There you go. Well,
Cool.
thank you very much for taking the time out to listen to us. This is Trading Trenches, giving you the best news and views. And yeah, just follow us on our journey as we continue to learn, improve, and hopefully improve yourself and your trading journey and investing journey. And yeah, mate, let's all make 2021 profitable in these adverse environments.
Cool. All right.
All right.
Peace.
Take care, man.
All right. Bye.
Later.